Heya Cryptozens, it's 10 p.m. Pacific time. My name is Nikodemus, and welcome back to the Crypto Overnighter, where we take a nightly look at the crypto, NFT, and metaverse space. And keep in mind, nothing in this show should ever be considered financial advice. It's November 3rd, 2022. Let's get to it. Start things off tonight with JP Morgan, because TradFi seems to be the theme of the night. They were part of a pilot project, and it was called a, quote, big step towards enabling more efficient and integrated global financial networks. So here's what happened. JP Morgan Bank carried out its first cross-border transaction using decentralized finance protocols on a public blockchain. Specifically, it was mostly handled on their side by Onyx. Now, Onyx is their business unit that focuses on blockchain technology. This cross-border experiment was facilitated by the Monetary Authority of Singapore. The other participants in Singapore's largest bank, DBS Bank, SBI Digital Asset Holdings, and the Oliver Wyman Forum. And like I said last night, Singapore is popping up in the fintech news sector lately because it's their fintech week. This is another example. So this experiment was done on November 2nd. It was set up by the central bank's Project Guardian, and it's kind of continuing a theme here from last night, using decentralized finance to handle problems that traditional finance or TradFi can't, or cases where DeFi handles it faster, cheaper, and better than TradFi. Now, one example that's been coming up lately is the wholesale finance world, transferring value between financial institutions, both commercial and government. And this is another one of those cases. They called it part of a pilot to, quote, explore potential decentralized finance applications in the wholesale funding markets. And this goes right along with last night's story of TradFi institutions using tokenized assets and DeFi protocols for financial transactions. This test was conducted on the Polygon network using a modified version of Aave's smart contract code. So, according to Singapore's central bank, this experiment was a, quote, live cross-currency transaction. It was carried out using a tokenized Singapore dollar as well as Japanese yen deposits. They also conducted simulations of buying and selling tokenized versions of government bonds. Tyrone Laban is the head of blockchain launch and Onyx Digital Assets. He announced the news on Twitter. And it was in his tweet that he pointed out the tokenized Singapore dollar deposits were the first bank-issued tokenized deposits. Meanwhile, the central banker's chief fintech officer said that it was a big step. This pilot represents progress towards a more efficient financial environment and that it has improved the country's digital asset strategy. Quote, the live pilots led by industry participants demonstrate that the appropriate guardrails in place, digital assets and decentralized finance have the potential to transform capital markets. Umar Farouk is the CEO of Onyx by JP Morgan, and he told Bloomberg that this transaction was, quote, the first time that a major bank, possibly any bank, had tokenized deposits on a public blockchain. And remember, Aave provided some of the code on this, and they said that it was a huge milestone, that it, quote, represents a massive step towards bridging traditional finance assets into DeFi. So keeping things straight here, last night we were talking about Project Mariana. This one is Project Guardian, and it was stood up in March of this year. It represents a partnership between JP Morgan Bank and DBS Bank. They said that they want to stand up a cross-border payment platform on the blockchain, but this is designed to work with the central bank digital currencies. Notice they said it was the Singapore dollar and the yen. There's no crypto. Now, one TradFi institution that does have some crypto news is Fidelity Investments. Fidelity Investments is leveraging their subsidiary Fidelity Digital Assets to offer a new product to their consumers. They're planning on commission-free cryptocurrency trading services. Now, it's commission-free. It's not free. They do plan on charging a 1% spread on every trade. Now, in this case, the spread is the gap between the buying and selling price. So, not much at all, really. And it's going to be limited to Bitcoin and Ethereum at first. but it's still another method for retail investors to start investing in crypto. Now, we don't know when this new offering is going to launch. However, you can sign up to get on their waitlist. Now, as far as why retail, they said that they were focusing on retail investors for crypto trading because most of their clients already have investments in digital assets. One asset manager said, quote, "A meaningful portion of Fidelity customers are already interested in and own crypto." Which, not taking anything away from Fidelity here, but it's nice to see something for the retail investors. Now, they did just recently launch Ethereum holding in custody, but that's for their high net worth customers. And it's in addition to what they did to the 401ks. What they did was they gave the managers of the plans the ability to invest in Bitcoin directly through the 401k, but that's not a consumer level, that's choice, that's not a customer choice. That decision is made by the plan administrator. That said, Fidelity has been a long major cheerleader for crypto. They called crypto a superior form of money. In other exciting TradFi crypto news, we have the Swiss investment bank UBS. They're also getting involved in settling digital bonds. And they're doing something a little different, though, taking something of a hybrid approach, because they're settling using a digital exchange, SDX. This means that they get to avoid using a central clearing counterparty. So UBS announced their hybrid digital plan today. And in their announcement, they said it was the world's first publicly traded and settled bond on both blockchain and TradFi exchanges. UBS said that a digital bond existed in the same kind of space as a traditional senior unsecured note, as far as legal status and rating go. They said, quote, "Through this bond, UBS enables investors, regardless of whether they have the blockchain infrastructure, to invest in a digital bond. This removes a hurdle on the way to adopt new disruptive technology that can make issuing bonds faster, more efficient, and simpler." So this bond is a $272 million 3-year bond with a 2.33% coupon. And the bank is going to list the bond at both a digital as well as a traditional exchange. And it will be available for the Swiss bond index. UBS said, quote, "Investors will have the ability to automatically settle and clear the UBS digital bond on either SDX CSD directly or on SIX Swiss exchange." Beatrice Martin is group treasurer for UBS. She said that this shows UBS's commitment to supporting new investment infrastructures, quote, "not just as an enabler, but to make it a true differentiator for UBS." That's for UBS customers. Goldman Sachs customers, however, will be offered a different new service soon. And this one comes from Goldman Sachs, MCSI, and Coinmetrics. They've developed something they're calling a Datonomy, and it's a way of classifying digital assets. The idea is that this will improve market transparency and help investors analyze the digital markets. And it's by subscription from Goldman Sachs, MCSI, and Coinmetrics. So what they've worked out is how to divide the digital assets into 3 different categories: classes, sectors, and subsectors. They believe dividing it out like that provides an accurate picture in a granular way. And so it's expected that this Datonomy service will provide more of a consistent view into the markets. It will give investors a different set of filters to use to screen candidate assets, and it will help investors understand the aggregated properties of these assets at the portfolio level. Now, Coinmetrics is a provider of crypto reporting and analytical software. Tim Rice is their CEO. He said, quote, "This collaboration represents a significant leap forward for the industry as a whole, establishing a coherent and future-proof structure to monitor and analyze the digital assets ecosystem." For their part, MCSI provides the critical decision support tools used by investors. They announced separately that they've launched a series of new indexes using Datonomy. In other TradFi crypto news, we've got the multinational banking group Satander. And Satander has placed a limit on all crypto transactions for their customers, but only those customers from the UK. And as far as why they did so, they said crypto fraud warnings from regulators influenced their decision. In their announcement today, They said that they plan on protecting their customers from the risks associated with investing in crypto. Isn't that nice? They're going to protect you from yourselves. They said, quote, money held in customers' crypto wallets is unlikely to be protected by the Financial Ombudsman Service and Financial Services Compensation Scheme if something goes wrong. So, apparently, they feel that the best way to protect people from the dangers of investing in crypto, you have to limit how much of their own money they're allowed to risk by sending that money to exchanges. I kid you not. They said, quote, the best way to make sure your money stays safe. So what's going to happen is on November 15th, they're putting a limit in place, a maximum of £1,000 per transaction, a maximum of £3,000 in a month. They said, quote, we'll be making more changes to limit or prevent payments to crypto exchanges in the future, though we'll always let you know before we make these changes. That said, they don't have a problem with things going in reverse. They said that they weren't limiting how much money customers could take in from the exchanges, just how much they can send out. So this goes back to that old refrain, right? First they ignore you, then they laugh at you, then they fight you. I think that's where we are now. Because they're presuming to tell functioning, intelligent adults in the UK that the bank knows better than they do just how much money they should be allowed to risk on crypto. So here's the question. Does Satander's limit how much money you're allowed to send to the casinos? How much money you're allowed to spend on the lottery? How much money you're allowed to invest on the stock market? Because if not, why the two policies? Why give free rein to gambling or stocks, but not crypto? That's because, unlike gambling, unlike stocks, crypto threatens to upend the whole apple cart. And right now, financial institutions are trying to figure out how to survive the impending adoption of crypto. Some, like the central banks, are trying to create their own competitors in the form of CBDCs. And others, like Satander's, are only interested in fighting crypto. And then some, like Fidelity, they're smart enough to figure out how to use both TradFi and DeFi to maintain financial relevance. And we're going to leave it there for the night. I want to thank you, my listeners, because when you stop listening, I will stop talking. Good night.